Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. Last week, the US dollar index staged a sharp rebound from the Fed's post-cut low of 96.22, climbing to 98.8 by the weekend. The move came after the Federal Reserve signaled its stance was not as dovish as markets had anticipated. A measured pace could keep the index in the 98-100 range, but a faster pace might send it below 98, testing 95.8. Quarter-end liquidity tightening could briefly lift dollar funding costs, while global easing elsewhere may keep the greenback relatively attractive. WTI crude slipped 0.07% last week, closing at 62.32, its third straight daily decline. Abundant supply and concerns about weak demand outweighed hopes that the Fed's rate cut would boost consumption. Strong global output, refinery maintenance, and rising US distillate inventories capped price gains. Geopolitical risks, such as Ukrainian strikes on Russian energy facilities and talk of potential international levies, offered some support, but persistent oversupply worries limited upside. Gold surged to a new record high of $3,707 midweek, before retreating to $3,626 as profit-taking set in. By the weekend, prices bounced again, touching $3,685, marking a fifth straight week of gains. The rally reflects investor reaction to the Fed's first rate cut since December and the possibility of more to come. Policymakers cautioned, however, that persistent inflation could slow the pace of easing. The Bank of Japan kept its short-term policy rate steady in the 0.4 to 0.5% range last week, in line with expectations. It marked the fifth straight meeting without a hike since January's 2 basis point increase. The yen faced renewed selling, with dollar-yen testing bids just below 147.5. The BOJ said the economy is gradually recovering, but flagged weaknesses and risks from global trade policies. It also announced plans to begin selling some ETF and J-REIT holdings. The euro-dollar pair swung higher to a 4-year peak of 1.192 last week before reversing to 1.173, though it still logged a third straight weekly gain. In Europe, political unrest added pressure. Mass protests erupted in France against new austerity measures, challenging President Emmanuel Macron and his new Prime Minister. While the euro maintains a broader bullish bias, near-term gains may be tempered by political headwinds in Europe and the dollar's resilience on stronger economic data.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.